Hey everyone, capital market sector has been a very strong beneficiary of upcycle in Indian stock market, mainly because it mirrors the growth in the market. For instance, when the stock market is going up, people invest more money in mutual funds that directly benefit AMCs like HDFC AMC, Nippon AMC, Motilal Oswal. Then rich people invest via PMS that directly benefit wealth management firms like Nuvama, 361. Then another very strong beneficiary of upcycle in Indian stock market is the brokerage sector that has witnessed exponential growth since COVID, and one listed company from this segment is Angel One. Then many companies got listed in the Indian stock market in the last 1 to 2 years to benefit from the high valuation. And one company that helps institution in their IPO listing is DAM Capital that recently got listed. Obviously, this rally benefited DAM Capital as well. Next beneficiary was CDSL due to a huge surge in Demat account from 4 crore in March 20 to 18 crore recently. And then you have CAMS, Kfintech that are RTAs for mutual fund companies which manages all transactions and back-end work for AMCs. Now if you look at performance of these companies in the last few years, they have created massive wealth for the investors. However, there has been a sharp correction in all these companies in the last few weeks. So in today's video, I'd like to share my viewpoint on why these companies have corrected so much, and more important, what can be the expectation from these companies in both near term and medium to long term. Alright, let's get started. Before we discuss the reason for correction, let's take a step back and understand the financial performance of capital market companies. So this slide shows the performance of top listed companies in Indian capital market sector, and look at the performance in trailing 12 months. CDSL, both revenue and net profit growth above 50%. CAMS 24% revenue growth, 34% net profit growth. Kfintech, revenue up 31%, net profit up 41%. Nuvama, extraordinary performance with 46% revenue growth, 89% net profit growth. 361, nearly 50% jump in both top line and bottom line. DAM Capital, simply exceptional performance. IIFL Capital, again brilliant. And all remaining companies, Angel One, HDFC AMC, Nippon, Motilal Oswal have shown brilliant growth. In fact, some of the companies have already declared their Q3 results and the performance has been pretty good. CDSL revenue is up 31%, net profit up 21%, Kfintech revenue up 33%, net profit up 35%, 361 revenue up 21%, net profit up 44%. DAM Capital has posted excellent Q3 results with 132% growth in revenue and 145% growth in net profit. Angel One results are on the lower side in Q3. HDFC AMC and Nippon AMC have also posted very good numbers. But in spite of excellent growth in trailing 12 month and very good Q3 numbers, there's a sharp correction in the range of 25 to 50% in all these capital market companies, where IIFL Capital has fallen the most, followed with 40% correction in DAM Capital, Motilal Oswal, Angel One, and then more than 30% correction in CAMS, CDSL, Kfin, Nuvama, etc. So there are two reasons behind this correction. First reason is overvaluation. While the growth has been fantastic in all these capital market companies, the share price has zoomed much more than the growth in last 1 year. For instance, before the correction, CDSL was up more than 100% within a year. Nuvama was also up more than 100% within a year. 361 also more than doubled. CAMS nearly doubled. Kfin was up nearly 150%. Then DAM Capital recently got listed at IPO price of around 283 and immediately zoomed to levels of more than 450. IIFL Capital was up 170%. Motilal Oswal jumped more than 130%. Clearly, the growth in share price of these capital market companies in last 1 year was way more than the earning growth. As a result, the valuation became expensive. CDSL touched peak PE of 76 versus median PE of around 39. CAMS touched peak PE of 64 versus historical median of 45. Kfin PE touched peak of 86 versus median of 42. 361 touched peak PE of 47 versus median of 32. Some companies like Nuvama, DAM Capital recently got listed, so we don't have much historical median valuation. But clearly, majority of capital market companies were trading at much higher valuation as compared to the median valuation. Now this kind of valuation could only sustain when the coming quarterly earning growth is also expected to be very high. And that's where there's a catch. The performance of all these companies are directly linked to the stock market performance. When stock market does well, more and more people open Demat account and do more trading transaction, and then more companies get listed, more people invest via mutual funds or PMS and so on. And it directly benefits the entire capital market ecosystem. However, when the stock market falls, all investment and trading activity reduces, that directly impact the earning growth of capital market companies. So at this point in time, when stock market has fallen, it will directly impact the stock market activities and hence the profitability of capital market company in coming quarter. And remember that 2024 was fantastic for them. So they already have a very high base. It means 2025 performance could be subdued as compared to 2024. On top of that, valuations are already at much higher levels as compared to historical median. And that is exactly the reason why capital market stocks have corrected significantly. And this is not the first time it has happened. Just look at CDSL journey. It IPO'd in 2017 and was at levels of around 200. Over the next 3 years, stock price became half to around 100 rupee because of sharp fall in mid cap and small cap index followed with COVID correction. But when the stock market zoomed, its stock price zoomed nearly 8 times. Again, there was a phase when stock market corrected for 15 months and CDSL share price fell down by 40%. But when the stock market again recovered, CDSL zoomed nearly 5 times. And today, it is again down 35% from the peak. If this weakness in the stock market continues, capital market companies would continue to feel the heat. However, the silver lining is that if you can handle this volatility, capital market stocks are a great proxy to play the financialization theme in India. Indian economy is bound to grow at one of the fastest rate in the world, and hence Indian stock market is bound to do well over the long term. Mainly because of increase in retail participation via both mutual funds and individual stocks, and SIP India is a structural shift. It is only going to increase over time as more and more people realize the wealth creation opportunity from Indian stock market. Also, the fact that today you don't have many options. Your fixed deposits are not even able to beat inflation. So equity is the only best option we have for long-term wealth creation. Of course, it comes with its own challenge of volatility. So it won't be easy, but those who can ride volatility over the long term and in fact utilize correction to invest at lower level would create wealth from capital market companies. And I strongly believe that it is just beginning of capital market sector of India. There's a long journey ahead. So bottom line is, long-term story in these capital market stock is very bright. But in the short term, that is next few quarters, it is going to be challenging as upcoming results can show slowdown due to fall in stock market and high base of 2024. This cyclicity in capital market sector is one risk I've always discussed in my videos. In fact, I recently covered the IPO of DAM Capital and explained the same concept in detail. So the next few months, capital market companies can show further weakness if the Indian stock market continue to remain weak, and that correction can be utilized for further investment. I hope you got a fair idea on why capital market companies share price has tanked and what is the expectation for the near term as well as mid to long term. Now tell me in the comments, what is your take on capital market stocks? Have they bottomed out or there is more pain ahead? If you find this video useful, do share it within your circle, and in case you are a long-term investor, you can also explore my weekly video series where I discuss my own investment strategy that includes stocks I am adding or selling from my portfolio along with tracking more than 200 quarter results. And there are many more videos I planned on my YouTube channel in the coming days around IT sector, private banks, ER&D stocks, small finance companies, etc. So stay tuned. Till then, take care.